Good morning, everyone. Welcome back to the Daily Hunt for Multibaggers, airing on this Wednesday, February 11th, 2026. We've got a fascinating lineup for you today, based on the market chatter and AI-generated insights collected yesterday, February 10th.
That's right, Ethan. Our systems processed a substantial volume of social media discussions, flagging quite a number of different stocks. The overall market sentiment we're seeing today is a bit of a mixed bag, with some strong bullish pushes and a fair share of caution.
Absolutely. Let's dive right into the specifics, shall we? First up, we're looking at U.S. Bancorp, ticker USB. Now, this one's intriguing. Our AI analysis shows a slightly bullish outlook, driven by a narrative we often hear: bad news is good news. We saw discussions where users are interpreting potential weaker job numbers as a catalyst for Federal Reserve rate cuts, which is generally seen as bullish for the market, and by extension for a financial institution like USB.
Well, Ethan, while that market interpretation is certainly prevalent, the original post that sparked this discussion was actually quite bearish, advocating for puts on USB. And let's not forget the minor net selling by insiders over the last 6 months, which is a slight cautionary flag, even if not a major red one. While the bad news is good news thesis is compelling, the actual discussion about USB itself was quite limited, making that bullish inference a bit indirect. However, the KPIs do show strength. USB is trading very close to its 52-week high, with solid profitability and an attractive 3.38% dividend yield. Its beta is just over 1, meaning it generally moves with the market, potentially amplifying those rate cut benefits.
Right, Brooke. And that historical stock performance, moving from around $45 to $60 over the past year, really shows underlying strength, suggesting it could definitely benefit from an overall market rally if those rate cuts materialize. Considering all that, and that we've never rated USB on this podcast before, I'm leaning towards an optimistic view here. I'd agree that the fundamentals are solid and the market narrative is strong for this type of stock, but investors should be aware that if the market doesn't react as expected to job numbers, USB's beta could amplify a negative movement too. Fair point. But for today, based on the prevailing sentiment and strong KPIs, our AI-generated insight for USB is a buy. Next, let's talk about Robinhood markets, ticker HOOD. This one certainly generated a lot of discussion yesterday, with a huge volume of posts.
And not much of it positive, Ethan. Our analysis came back as very bearish, primarily due to their Q4 revenue miss. Users are expressing significant frustration, with many calling themselves bag holders from higher prices. The stock has fallen drastically from its 52-week high of over $153 to currently around $85. And that low revenue growth of 1.0 is a serious red flag, especially for a growth-oriented company.
Now, to be fair, Brooke, Robinhood did beat EPS estimates, and we saw some insider buying over the last 6 months, which can be a positive sign. There were a few contrarian voices, suggesting it might be oversold or a dip buy opportunity for those with capital. But overall, the discussions were heavily focused on that revenue miss. Even the discussions about options on HOOD were largely skeptical about the profitability of bearish bets due to things like IV crush, not necessarily because the stock itself was seen as poised for a massive rebound. The high price-to-earnings ratio of 36.1, coupled with that stagnant revenue growth, suggests the stock is overvalued for its current performance. And let's not overlook that very high debt-to-equity ratio of almost 189. That's a lot of leverage for a company struggling with top-line growth. We've rated HOOD as stay away many times in the past, including as recently as February 10th. Given these numbers, I don't see any immediate improvement on the horizon. I hear you. The fundamentals simply aren't aligning with what you'd want to see for growth potential here.
Exactly. So for HOOD, our AI-generated insight remains a stay away.
All right, moving on to Microsoft, ticker MSFT. This tech giant always gets a lot of attention, and today is no different. Our analysis indicates a strong bullish sentiment, with users setting price targets as high as $500 by summer or year-end.
Yes, Ethan, and the discussion largely revolves around Microsoft's incredibly strong core business. Users believe that even with heavy investments in AI, the company's fundamental software and cloud offerings provide a robust financial cushion. They argue Microsoft can simply pull back on AI CapEx if needed, and their legacy businesses will continue generating substantial free cash flow. Plus, that net profit margin of nearly 40% is just phenomenal, indicating incredible efficiency.
Absolutely. We're seeing strong revenue growth at 16.7% and an exceptionally low debt-to-equity ratio, indicating strong financial health. Those are hard numbers to argue with, even for the cautious investor. This also aligns with significant insider buying over the last 6 months. This isn't the first time we've rated MSFT a buy, with our last rating being a buy on February 10th.
While the optimism is certainly justified by those KPIs, we did see some cautionary notes. Melius, for example, downgraded Microsoft to hold, citing AI capex and cash flow risks. And some market commentary suggested they need to explain their story better. A PE of around 26 is high, indicating significant growth expectations are already baked in. So while the underlying strength is undeniable, any stumble in their AI ventures or clearer cash flow risks could be scrutinized.
True, Brooke, but the prevailing sentiment and those rock-solid financials really do paint a strong picture of continued growth and resilience for Microsoft. The insider confidence is a huge signal.
I concur. The numbers speak for themselves.
So for MSFT, our AI-generated insight is a definitive buy. Well, that wraps up our stock-by-stock analysis for today. Let's recap our top candidates for deeper investigation.
Here's the rundown of what our AI analysis has flagged for you to consider. Investigate as buy, USB, Microsoft Corporation. Investigate as cautious buy, none. Investigate as speculative gamble, Robinhood Markets Inc. And that's all the time we have for today on the Daily Hunt for Multibaggers. Just a quick reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
That's right. Listeners should conduct their own research or consult a licensed financial advisor before making any investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for joining us. We appreciate you tuning in.
Until next time, happy hunting.